how can risk-averse investors confidently navigate market volatility and economic uncertainties? And of course, what role does inflation play in investment planning, and how can individuals ensure their investments keep pace with inflation?
One is that there is no easy way to navigate the volatility, because it takes effort to accumulate your savings, defer your consumption, which is the money which is being invested. So when you see, and markets by its very design, they go up steadily, and it's the old saying that it goes by staircase and comes by lift. So, that is quite unnerving for any investor getting started. And that is a challenge. That is a challenge for a new investor. That's a big challenge for a new investor. And that remains a challenge for even experienced investor, because you keep getting bigger and bigger surprises. What we got in January 2020 was one, what we got in 2008 was another. So so investors have to, gradually, steadily graduate to this. And the only way, somebody like Vishal can actually play a very active role in terms of, because telling this whole most people, they get introduced to investment in a very unusual way. Everybody wants high return in the small, brief period of time, and that is what people's expectation of investment is, and that is not investment. When you actually put money with an idea to take it out the moment it goes up, that's not investment. Investment is the money that you invest with a time frame in mind, that this is the period for which you don't need the money, and it will remain invested like that. So keeping money to remain invested as compared to keeping money to take it out as soon as possible, that is the introduction. That is what we see. So, investing is all about steadily graduating from maybe a recurring deposit, not necessarily an equity fund, because the first challenge is to become a saver. Then becomes it should be your goal to become an investor. Then and in a very gradual manner. So maybe the hybrids and the conservative hybrid fund could be a good way for anybody to start who has no experience of the market-linked investment. Then comes getting used to, and even after that, somebody who has been investing for 5 years, 10 years, I've seen them panic at the first instance when they see the big crisis, and that is the biggest challenge, because most of the mistakes are done when the markets are going up without much to anybody's understanding, and also when markets people panic and they bail out. So those are two crucial elements when advisors can actually play a very important role in terms of giving perspective, how it works, why, and how you have to, because staying the course is the secret, and staying the course is not normal, is extraordinarily difficult to be there, and keeping it simple, understanding that investing is a boring course on which you have to stay, and that's all about it. That's all there to it, and you have to just take a course so that you stay there.
Well, just like with our health, you need to exercise every day to keep your body fit. So too is true for your financial well-being, where you need to stay the course. And as the message has been recovering both from Vishal, Dhirendra, and Mr. Rao's talks, that to stay the course, you need to have sense and sensibility. And investing doesn't necessarily need to be an exciting enterprise, but to take that forward, in a sense, a certain section of investors, they do not have as many hangups when it comes to risk. So how do they navigate it forward? Amrita, I'll bring you into the conversation for this, because when we look at millennial and Gen Z investors, they exhibit comparatively lower skepticism towards higher risk investments compared to their preceding generations. Now, this change can be attributed in part to the prevalent influencer culture and the deeply interconnected nature of our contemporary world. So your perspective on this evolving trend, where investors, they display a higher willingness to fully commit their resources, sometimes they might not fully understand.
Yeah, well, I completely echo the trend, and it's quite fascinating. I think it signals a shift towards the attitude of this generation towards money, and I agree with you that their risk-taking abilities are way higher than the previous generations, and this could be attributed for a few reasons. If you see, first of all, yes, of course, the influencer culture cannot be overstated. They are interconnected to the world today with the millennials. There is a lot of information and perspective of these investors who have become influencers, which is available. So there's a lot of information which is available, and the influencer culture in particular has significant impact in because well-known personalities are sharing where they're investing, what their strategies are, and it encourages the younger generation to take on riskier investments. And the second reason I would believe is that these generations have grown up in a time of rapid tech advancement, which brings in ease of execution and gives them a much larger catalog. So if you look at it, P2P lending, crypto, NFTs, global stocks, these are catalog which these are in asset classes or assets which were not even available to younger generation. So the influence of tech has also made it a way lot easier for these generation to access information, platforms, and thereby making them more comfortable to take higher risk in such instruments. But if you look at finally, there was a Deloitte survey which shows that the millennials do have financial concerns. They are also striving for balance and looking for opportunities to grow. And this could also be a reason for them to take higher risk because they all want to potentially achieve their goals, financial goals
Hmm.
faster. But as thought leaders, I think it's important that we empathize that while taking high risk investments can offer high return, they also come with a very significant potential for loss. And it's crucial to encourage that people invest responsibly and do proper research and risk assessment.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.